Really, how much of a disappointment is this?
I think it's hi Tom, good morning. I think it's a small disappointment. However, as you mentioned, it's still solidly in the expansionary domain. So month-to-month numbers can be a bit volatile. So I wouldn't worry too much about the slight miss at this point. I think the cyclical recovery is still on track. On the demand side, the indicators are strong. Perhaps the production curbs, as you said, that try to curb the emission is a slight downside factor. But I think the demand picture is still looking good.
Okay, what are services, the demand for services domestically looking like? Bloomberg Economics, our own analysis in-house, have downgraded their growth forecast for China, but they say that the growth mix is looking healthier. Do you concur with that view, and where do services fit into that?
Yeah, I think in terms of the services activities, you can certainly see a pickup of the offline services, such as restaurant, such as traveling. The demand for tourism during the May 1st holiday is quite strong. So we also see that in the March retail sales numbers. But in terms of construction, that is still fairly soft, especially compared to past period. That's largely because the government really hasn't done very much in terms of stimulus, infrastructure spending, etc. So there is, in that sense, a pickup of consumption, but slight smaller numbers on the infrastructure front. I would agree that from a mix perspective, it is more sustainable and less credit intensive.
Where are we in the industrial investment cycle when it comes to CapEx, for example?
I think this time around, you actually will have a more sustained CapEx cycle. What we have done is we look at CapEx by different sectors. You can see that the CapEx by the growth sector, such as medical and high tech, it's very strong, not surprisingly. But the CapEx of some of the old industries, for instance, some of the upstream sectors, is actually picking up. We think it has a lot to do with the upgrading needs of these upstream sectors in light of the need to deal with new emission standard or the need to upgrade their equipment for advanced technology. And the consolidation in the last few years actually enabled them to do that because their margins have improved. And this also benefits from the latest reflation trend globally. So we see that they actually start to build some capacity, and that start to become an incrementally positive factor for the CapEx cycle. So we don't think the CapEx, broadly speaking, is going to pick up significantly. It's going to be a gradual process because there are still sectors such as auto that's consolidating and cutting CapEx. But the trend in terms of the mix is that because of the consolidation, because of the improvement in profitability, and because of the need for transformation, there is new demand for the companies to add upgrading and also to defend themselves in their business. So we think the CapEx cycle will be on a gradual process moving up. And this trend, we think, is going to be fairly sustained this year and in the next few years.
Okay, we touched on the industrial metals, the prices that we're seeing here, and it's feeding, of course, into the factory gate prices that are rising. That's good for the corporates. But is there a risk of an inflation shock brewing in China, potentially?
Well, I think at this point, the inflation is mostly from global. It's mostly a global scenario. But I do think that China needs to watch that. That's probably why policymakers are on hold at this point. On the one hand, they have the growth recovery and reflationary trend going on, and that argues for some tightening. But at the same time, there are a lot of needs for debt issuance domestically, and there is also, seasonality. So I think they are trying to balance this too. But I think the broader picture is global economy is recovering, and the prices are global. Reflation and industrial prices will continue to stay solid, even though right now it hasn't transmitted into CPI in China. It's something that will put the policymakers more on alert, and we will expect some increase in market rates later in the year.
Okay, Cui Li, before we let you go, just your views on something that's been very much in focus in the last couple of weeks, which is the census out of China and whether or not the population has indeed peaked. What are the demographic challenges facing this country and the implications for growth?
Yeah, I think I also saw that report. I think the aging process is not a surprise. Personally, I don't know in China is going to a major constraint on growth because one, it's a slow process, and two, we still have a lot of surplus labor. You know, in China, the legal retirement age for men is 60 and for women is 50 to 55. So it probably does put some pressure on the government to adjust that policy, but we certainly don't have a labor shortage because of the population aging. And number two, and also I think in terms of the consumption picture, the population still have a high savings rate. And that savings rate is coming down. So even though probably the population trend is not favorable, but the decline in savings will support consumption. So broadly speaking, I think in terms of constraint on growth, it's not very much. And also the policymakers do have space to adjust their policies to counter the trend.